This is Scott Becker with the Becker Private Equity Business Podcast. We come to you daily with short business episodes, short private equity episodes, interviews with brilliant private equity business leaders, and a lot more. We're joined today by Rick Kes, one of our most listened to guests from RSM, leading middle market private equity firm. Consultants, private equity firms, I should say, leaders, quality of earnings, diligence, sell side assignments, and a lot more, and buy side. Rick, what's the temperature in private equity deal making today? What are you seeing? Is it starting to get exciting? What do you see out there?
It's a good question, Scott. I mean, I think, we're a bit more excited this week than we were 2 weeks ago. I think, last week there was kind of a noise and process and kind of trying to figure out, okay, well, what is this overall, economic cycle news mean to us? And will we see interest rates reduced in September? Will there be an emergency Fed meeting? Will all these things happen or not? And how this will all come together. And I think give a week's time. A lot of that news hit early in the week, and I think by the end of the week and then today, I think we're feeling a little bit more like September looks pretty likely. Emergency Fed meeting looks sort of unlikely, but we are anticipating seeing rate cuts. I think with that, we're starting to see, people again getting a little bit more excited about deal making, and hopefully that's true in reality. But it's hard to know, like, does all this macroeconomic news and information change things, and how quickly does it change things? Is it a week, a month, a couple months? It's hard to know exactly how that will work. But I think we've shared this sentiment before that the U.S. economy is very strong. It continues to be fairly resilient. Those things are all good. There's a lot of dry powder on the sidelines. So I think at one level or one point, all we really need is, something to change. And maybe this is that one thing, a rate cut and that sort of thing could be enough to really get that ball moving down the hill and really pick up steam towards the end of the calendar year.
Thank you. And it does seem like all of a sudden, the biggest funds, at least, you hear a lot more news and excitement out of the Blackstones, the KKRs about deployments and exits than we've heard in some time. Now, flip side is Apollo took it on the chin the other day in terms of their stock price, but you are starting to see, it seems, more interest in deal making than we've heard in some time, at least from the biggest funds, and hopefully some of that then transfers down to the mid-size and other size funds.
Yeah, and I think that usually does tend to be the case. I mean, I think that sort of news, that sort of deal activity, at the higher end of the middle market or the large market, cap type private equity deals, when those start to happen, I think that churn in the economy does really create a trickle down sort of impact to the core middle market, is obviously, where we kind of spend a majority of our time. And we were just, for instance, with a recent platform acquisition of a private equity group last week, had dinner with the CEO and CFO, and they've just closed one deal this in the past month, and they're fully anticipating closing two more deals to do platform acquisitions or bolt-on acquisitions to the platform by the end of the calendar year. And so I think, you'll start to see, some of those transactions that occurred, really doing those bolt-on acquisitions, which then I think maybe on the other end of the spectrum from the large market cap companies that are being transferred, the bolt-on acquisitions will also help bolster some of that, deal making activity in that deal making ecosystem, and start, I think, really creating that momentum forward to, hopefully, get some of that activity moving.
No, thank you. It sure seems like there started to be a little momentum, and you're certainly hearing the right sounds from the largest funds, right? And we'll see at what point that picks up. Obviously, the debt market and the prices of debt have a huge impact on the ability to do leveraged deals. And I guess we're starting to see mortgage rates finally come down. Hopefully, we'll start to see lending rates come down a little bit too, because that really does. The high lending rates put so much pressure on bolt-ons that it's almost made it so difficult to do the last few years. So we'll see how that looks over the next few months, really, as to whether we're seeing more stronger direction there in terms of the interest rates coming down, which makes bolt-ons a lot more plausible and affordable.
Yeah, no, we totally agree.
Well, Rick, I guess we're sort of reading the tea leaves here. So much is dependent upon the interest rates. I mean, so good to see some of the resiliency in the American economy. It's always concerning with the amount of debt we've got as the U.S. If we're not seeing growth with that much debt, then it's really scary. But at some point, that debt's got to slow down to allow inflation to come back into play and bring interest rates down too. Rick, thank you so much for joining us as always on the Becker Private Equity Business Podcast. What a pleasure to visit with you always. Thank you very, very much.
Thank you, Scott.